Today, I want to tell you guys about the minimum down payments for all of the loan programs that I have available to me, and some of them I bet you've never even heard of. Let's start off with this one. Yes, I have down payment assistance. Yes, I have it in your state. It's nationwide. You can literally buy a home where the lender will give you money to also pay your closing costs. So, this whole myth or stigma of I have to have 20% down to buy a home because that's how mom and dad did it is completely false. It's one of the most fabricated things in all of real estate. You can literally buy a home where the lender will give you money to pay your closing costs, and you come in with maybe $500 here or there. You have to have a little bit of contribution into the transaction. If you can qualify for it and you have a good job and you have above a 620 credit score, you can buy a home with $0 down. Well, under $500, let's just say worst case. That's a pretty good deal when it comes to buying a home versus 20% down like mom and dad did it. Now, let's jump into the normal standard programs that everybody hears about, a conventional loan. If you're a first-time home buyer using a conventional loan and you're not using down payment assistance, if you haven't had any ownership in property in the last 3 years, your minimum down payment is 3% of the purchase price. If you have had ownership in a property, maybe you sold one 2 years ago and now you found another one you want to buy. If you've had any vested interest in land or on a title, your minimum down is 5%. The second most popular loan in the United States is an FHA loan, and the minimum on an FHA loan is 3.5% if you have above a 580 credit score. If you have between a 500 and a 579 credit score, the minimum down payment is 10%. But technically, you can go all the way down to a 500 credit score as long as you have 10% to put down. The third most popular loan program is a VA loan, and as a thank you for serving and protecting our country, 0% down, no mortgage insurance. Everyone pretty much knows that. You can qualify for a VA loan if you've been in reserves or in one of the National Guards for a certain period of time. It just depends on if you've been deployed. If you've been in the Guard or the Reserve long enough, you also could qualify for a VA loan. You just need to check with the loan officer and pull your certificate of eligibility. The next loan program and the last one on traditional financing that we're going to talk about is USDA. This is mainly for a rural property, so you couldn't be in downtown LA and qualify for a USDA loan. It just doesn't work like that. You actually can go to USDA's website, and a lot of people associate USDA with food. It's very similar because this is an agriculture loan, at least that's how it started. So it's built for more rural areas, and you actually can do 0% down on a USDA loan. You also can do a 0% down USDA construction loan as well if you want to custom build a home. But the big thing with USDA, they have a lot tighter underwriting restrictions, and they have income caps where you can't make more than X amount of dollars and still utilize a USDA loan. Our next loan type is a bank statement loan if you have above a 680 credit score. This one's built for self-employed borrowers and 1099 contractors. So you have to be self-employed to utilize this loan, at least one of you. If you're a husband-wife team, one of you has to be self-employed, but we can use the income from the W-2 job as well. However, 10% down minimum if you have above a 680 credit score. If you're between a 620 and a 679, you're required to put down 20% because it is creative, non-traditional financing. Next up, we have DSCR, which stands for Debt Service Coverage Ratio. This is an investor loan. You can only use it to buy investment properties, and the reason for it is you're essentially making sure the property's cash flow. Does the property rents alone support the mortgage payment? If so, it's a no income, no asset verification. The only assets you have to prove is that you have reserves for the property and that you have the down payment if it's a purchase. The minimum down on this is 15%, but the real sweet spot is 20% for interest rates. The last loan we're going to talk about is a 1099 or P&L only loan, which is exactly as it sounds. You give us just your 1099 and say, here's my income, or a P&L that's officially done by a certified public accountant, a CPA. You can't just make this one up on your own unaudited. It needs to be from a CPA. That is also 10% down, but the sweet spot again on these are at 20% for interest rate, but it can be done with less down if you have above a 620 credit score. Thank you guys for watching today. Bye. As always, share this with anybody who you think may find it helpful. Make sure you subscribe to the channel or follow depending on the platform you're watching on, and we'll see you on the next one.